So today I have the pleasure and the privilege to interview Dr. Wafaa. And Dr. Wafaa is a university professor in the field of finance, certified financial educator and financial investments and coach expert. She's the author of the book, What They Don't Teach You in Schools About Money. Dr. Wafaa taught a range of courses in finance, including fundamentals of financial management, personal finance, corporate finance, financial markets and institutions, and security investments. Also taught principles of economics, macroeconomics, international business management, business ethics, and corporate governance. That's quite a bit. She's also published several articles in newspapers and presented on programs on radio and a newspaper over in Kuwait. Dr. Wafaa, the first question for you today is, what are your reflections of COVID-19 on the global economy?
Yes, Roy, thank you for having me with you today to speak about the reflections of COVID-19 on the global economy. First of all, the current situation has no precedent. Never before has economic activity been halted deliberately in such a massive scale. Never before seen a pandemic like the one we are experiencing right now. COVID-19 made people scared all around the world. The virus is shutting down whole cities, whole countries. Almost every aspect of our life has been disrupted by COVID-19. And the global economy, stock markets, and were no exception. For example, Dow Jones in March 2020 fell about 34% just in a couple of weeks.
Wow.
Standard & Poor's witnessed the biggest drop since 1987. On Monday, 26th of March 2020, Standard & Poor's fell 12%. Standard & Poor's 500 only fallen more than 10% 3 times in the history. One time in 1987 and 2 times in 1929, and in which called the Black Tuesday. And from there, the Great Depression starts. Now, this is for the stock market. Now, if we look at the job unemployment reached, as we all know, 30 million in US, according to US Bureau of Labor Statistics. The unemployment stands at 15%. That's well above the peak of unemployment during the financial crisis in 2008. At that time, it reached about 10%. In fact, it's more than what we have seen during any crisis. Also, the Federal Reserve lowered the interest rate to almost zero and printing about $2 trillion. In light of all these circumstances, we can say there are a lot of uncertainty in the future. There's a lot of fog also in the future. In the coming months, many businesses will file bankruptcy, and some businesses, they start now. Things won't go to normal as fast as everybody thinks. We already entered recession, and we are headed for a deeper recession. Some experts now, they are talking about depression. There's no doubt that COVID-19 has already badly affect on the world, and it will continue to do so for a while. Even the virus went away tomorrow, things will not go back to normal tomorrow. It will take time for businesses to get back. It will take time for people to find jobs again. It will take time for the global economy to recover.
Wow, that's quite a lot there, right? So it sounds to me like it's a completely new normal, but most importantly, lots of businesses have severely been impacted, losing billions and even trillions. So my last question for you, Dr. Wafaa, is how should investors handle this sort of situation?
Now, we are in the middle of the crisis. First of all, you can do, and this is for all people, not only investors, you shouldn't panic. Don't panic. When you are, there's a quote say, when you are in crisis, let the facts be your friends. When you are in crisis, let the facts be your friends. Differentiate between truth and noise. There are a lot of noise now coming from every direction around us, from social media, from news, from investors who have their own agenda. Let the fact be your friends. If we go a little back to the history and the recent history, in 2008, what happened? Dow Jones fell about 34%, from 13,000 to maybe 6,800, 300, something like that. And it wasn't until 2009 it began to climb again. Wow. If we went further to the history, also we have similar crashes in 1999, the technology bubble. Also, if you look at Standard & Poor's since 1920, the average return is 7%. The market is, we have to understand that market is cyclical, riding ups and downs. And after years of experiencing growth, a lot of experts, by the way, they expect the recession in 2020, although nobody expects the coronavirus, but a lot of expectation were about the recession in 2020. Now, nobody knows how long it will last, nobody knows how long it will take, but we know that it will correct itself in the long run, as historically does. We should not give up. Fear and panic is more contagious than viruses. Protect yourself from all noise outside, and because fear, it can ruin your financial future.
Wow, wow, wow. Yes, you're right. You're right. Yeah, fear is obviously not real, but sometimes with these situations, I guess it's very hard, you know, not to let your emotions kick in. So, wow. So let me ask you, Dr. Wafaa, so what do you recommend for people who are sort of interested in investing right now? Because as Warren Buffett says, one of his main rules of investing is buy low, sell high. So, I mean, so people who want to get into investing right now, are there good opportunities? I mean, what do you recommend?
Yes. Number one, I recommend learn some history. It is worthwhile. And use this history to adapt and understand what's going today. So learn, read, and educate yourself on how COVID-19 will impact different industries. It is important to understand that this event, the crisis we are living now and the event of COVID-19 affected already industries differently. We have seen that there are companies experiencing deep ongoing losses. In worst case scenario, it can be terminal. And like, for example, airlines industries, they ceased completely. But this type of industries badly affected. Some other companies already, they have much activity in their businesses and they have high demand. We have seen such businesses around us, for food industries, delivery industries, all this type of industries. If you are interested in investing now, you have to ask yourself this question: will the business I'm investing in will overcome the crisis?
Yeah.
There are a lot of businesses, they will not recover this pandemic, and it will take a long time for them to come back to business. Now we are in recession. Yes, recession is well known. It is time to buy and to invest. For example, there are a lot of companies, they have their stocks went down and you can invest, but You have to buy great businesses and right business. You have to know what's the effect on this business. Buy the companies that you select by yourself, do your research. You will find a lot of great companies around, and especially the company that sell product that you cannot get anywhere, companies that they have great or plenty of excess cash. Let me give you an example, Roy. Amazon, we all know the giant business, Amazon. Right now, we are in time of crisis. What most people doing now, most of every one of us has pulled back on their spending, but what we are still buying from Amazon. We are ordering from Amazon. So we haven't, maybe a few days ago, they said Jeff Bezos, he will be the first trillionaire in the history. This has come as no surprise. Amazon, they have about 100 million subscribers, all happily paying them $13 per month. This means what? It means recurring revenue stream of 1.3 billion per month. Again, the great thing about Amazon is that you don't need to be financial expert, financial manager to realize that it is a great business. This is one example. Another example, if you want Berkshire Hathaway, the company of legendary investor Warren Buffett, Berkshire Hathaway returns has roughly doubled the return of Standard & Poor's index since 2000. Now the company is sitting on a cash pile of 130 billion. It has a huge cash position. Now, I'm not saying it is not a recommendation to buy in Amazon or Berkshire Hathaway or even Microsoft, all these great companies. But what I want to say there are a lot of great companies around. Just you have to look at the numbers, look at the business of the company, their business model, and then you can find opportunities for investment.
Thank you, Dr. Wafaa. I mean, normally what I said to my people who I work with, who I train on investments, I say for stock selection, there are two important things to know. And one is called fundamental analysis, and one is called technical analysis. Obviously, from a fundamental perspective, you have to really research the company and understand the health of the company. So you give some really good examples of companies that have really good, strong health. And I guess people who are looking to invest also do their research.
With the solid financial statements and the cash flows, free cash flow, huge free cash flows. Yeah, this is an example. There are examples.
Yeah. I always say investigate before you invest. Not Dr. Wafaa. So obviously with all of this stuff, if you're an investor right now and people are like, some companies are falling, losing money, even Warren Buffett himself, actually, he sold off all of his airlines stocks. You obviously mentioned him, and therefore he has so much cash. Now, sometimes, people should operate based on logic. I always say this, financial intelligence, make decisions based on logic, but sometimes these kind of situations, people operate with emotion. Yeah. So Dr. Wafaa, how important do you think it is for people to control their emotion as an investor?
Yes, Roy, maybe the hardest skill you can learn as an investor is to control your emotions.
Mm-hmm.
The investment itself doesn't have behavior. It just exists. The investor has behavior. The investment goes up and down, just exists. Me and you, and we are as investors, we watch the news, we watch social media, we get stressed, we get scared, we need to make change, we go to the market and we end up losing money. A lot of investors in the last 2 months, they sold their investment and could keep happening. They sold when the market is down 30%.
Wow.
Dow Jones went down 30%, and just a couple of days after that, it surged again to 10%,
Wow.
and again down 20%. This is not a smart behavior by investor. One of the biggest mistakes is trying to time the market. Jumping in and out the market, it is a mistake. We are a human being, we are emotional, we are not logical. So it is hard to control our emotion unless you have the experience. Controlling your emotion, it doesn't come easily in the market, because we are, as a human being, we are emotional. We believe in what we feel, not what we see. So, one of the things you can also do to learn how to focus on long run, because rather than trying to predict what will happen in the market in the next few days or next few months, learn to focus on great businesses and be able to hold it for long time. Now, yes, it is unique opportunity to invest. Usually, a recession is an opportunity to invest. The greatest fortune in the history made in times like the one we are now. There is a quote or say for Charlie Munger. Charlie Munger is the partner of Warren Buffett. He said, "You don't make money when you sell. You don't make money when you buy. You make money when you wait."
Yeah, when you hold. Yeah.
Yes.
Yeah.
Yes.
So I can see what you're saying. Yes. You know, I think for me, there's obviously, I talk about investing and there's obviously trading, right? So with the market going up and going down, if you know what you're doing, if you have the skill, you can definitely make money from trading. That's where you basically trade the stocks. But today we're talking specifically about investing, where you buy and hold with the intention of the markets going up only. And it's therefore very important that you don't just let your emotion kick in and sell too quick. You know, sometimes you have to like ride out the storm, you know, ride out the storm. So look, we hear a lot about diversification, you know what I mean? And spreading your investment, you know, having different assets in different buckets. So what do you see as the important, say, of having a diversified portfolio in managing risk?
Yes, one of the most important rules in investing and in finance, don't put all your money in one basket. You have to do asset allocation. What do we mean by asset allocation? Is how you balance your wealth among stocks, bonds, real estate, precious metals, commodities, keeping your wealth or your portfolio in good diversified mix of assets is the key to avoiding any negative consequences or any negative losses. If you keep too much of the portfolio in one asset, like 80%, for example, in real estate, in 2008, the whole portfolio wiped out. And this is same goes for any other asset. Same goes for oil, for gold, for land, for blue chips companies. So there are a lot of strategies to determine your optimal asset allocation. Correct. And it varies, of course, depending on your age and your risk tolerance, your capital. This is there are different strategies, but the general idea is to spread your wealth or your portfolio across various assets such as stocks, fixed income, such as bonds, cash, precious metals, gold. That way your future will not be dependent on just one asset if the market goes south.
Yeah, good, very good answer. I mean, I remember when I was working in financial services within insurance, one of the big things that we do every quarter is to do an asset allocation to really look at the risk profile of the business and make sure that the assets that we have are matched to the liabilities in terms of our currency, maturity, and also geographical exposure. So that's asset allocation is very, very important. So look, since you mentioned gold as one of the asset allocation, there's a lot of talk right now that we are sort of headed into, I guess, a great bull market in gold, you know. And
Yeah.
what do you think about that?
Yes, as we all know by now, the Federal Reserve, to help stabilize the economy during the coronavirus crisis, they print $2 trillion, and
Wow.
it seems more printing on the way. There's intention to print more. And the basics of economics can tell us at least one of the outcomes. Printing new money will weaken the currency, will weaken the dollar in this case, the dollar in circulation. At some point, the prices will increase, then inflation is guaranteed. Gold now increases typically prices, of course, due to three interconnected fears known as fear trade: fear of war, fear of unknown, fear of recession. Currently, war may not be an immediate concern. It is not on the table, but there will be plenty of fear of recession and fear of unknown in the weeks and months to come. And that will drive investors towards gold, and it will drive the prices to go higher. Now, nobody knows yet how severe the long-lasting pandemic's economic damage will be. There will be tendency towards higher prices in general, and gold prices can rise more than anyone expects. In a report titled "The Fed Cannot Print Gold," Bank of America recently raised the 18-month gold price target from $2,000 to $3,000 per ounce. And that is far correct. The Fed cannot print gold. It cannot be diluted like the dollar can. So investors feel that their money is safe with gold. As obvious, the Fed and the government will continue stimulating the economy, of course, to reduce the effect of coronavirus. This means they will print more money, and this will lead to higher prices. And for gold, there are a lot of expectations about $3,000 per ounce. It is likely.
Wow, wow, wow. So wow, yeah. So gold sounds like to me like something like, you know, a kind of a safe haven in terms of crisis, right?
Exactly, yes.
People move towards gold. So look, we've been talking a lot about you know, investors and investments and big companies. You know, what we haven't spoken about is actually the people who've been impacted of the virus. So right now, what are your recommendations to those people who have lost their job?
Yes, now there is a job crisis. You need to control the uncontrollable. There is portion related to you. You have to control it. Mm-hmm. Then the hope will replace fear. You lost your job, but you still have the skills. You still have the creativity. You still have the experience, and you still have your dreams and your hope. Don't let anybody take your hope from you. You can change how you deal with money. Develop your financial management skills. Learn how to budget and spend wisely. You are now in the middle of the crisis. Stop spending anything or doing anything with money except necessities. If you never do a budget before, it is good time to start now. Be intentional with your money. Don't get debt. Maybe this is a wake-up call for you to change how you deal with money. there is a lot of peace by doing that. Stop thinking about anything else till you find another job, and you may tap on saving. That's fine. Crisis will not last forever. We have pandemic of fear. None of us can think clearly. The crisis make you feel that maybe that your dream taken from you, that businesses you dream of, no matter what, things will go back to the track. I want you to have that peace, that clarity, that confidence. The opportunities may come even better. You may get a better job. Now you need to control your attitude. Your attitude is matter now. You are not a victim. It is a decision. It is matter of self-control and self-discipline. Just be smart with your money.
I like that. I like that actually, because one of my favorite quotes, by the way, is it says, you know, your attitude, not your aptitude, will determine your altitude, and that's by Zig Ziglar, you know. And you know, and you talk there about about fear, you know, a lot about fear, you know. Fear can make people do things that obviously are not what they would normally do, but I guess sometimes people just react only to realize that the fear is not real, you know. I also personally feel that people right now can take time to, you know, educate themselves. They can take time to, you know, be resourceful, you know, and also be entrepreneurial as well, you know. We talk about job. People lost their job, you know. People have been taught and educated to get a job so much, but obviously if you lost your job, one idea is to try to do a business. See how you can add value to others. So that's just one idea. So Dr. Wafaa, look, there are many people who lost their job, yes, but there are many people who are still in their job. Yeah. So for those who are in the job, you know, what do you recommend?
Yeah, Joy, as you just mentioned, it's very important point that you may start thinking of having your own business. This is very very important point you just mentioned. If you're still in your job, if you're still working, this is good. You are in good position. Make sure you have at least 3 to 6 months expenses saved for emergency fund. Save your money and make sure you are prepared for what's coming. Nobody guesses how long this crisis will last, and we don't know if COVID-19 will return next year. Now they are saying may return next year. It's always better to be over prepared. Take care of your financial well-being, get organized, keep your basic expenses organized, get clear about where you are now and where you want to be. Maybe it is now opportunity to think about that business you are thinking of to establish since long time. Start develop your financial skills. This is very important. There are a lot of resources out there. They are for a lot of books and resources for free. So a lot of people, they know they have to do it, but they don't take action. Now it is very good time to start taking action.
Wow, I completely agree. You know, I always say to people, try to be proactive rather than be reactive. So even if you're still in a job, well, that's great, you know, but obviously many people have lost their jobs as well. So you have to think, you know, how do you potentially secure yourself much better? Look, some people still have, they're sitting on cash right now, you know. Maybe there was holding some stock, some companies, and they've sold out, you know, they've sold out of the companies, etc. And they're sitting on cash right now. People like obviously Warren Buffett is always sitting on billions. But look, if someone had 10,000 pounds right now, 10,000 US dollars, you know, whatever currency it is right now, and wanted to invest, what would be your recommendations?
Yes, Roy, you remind me of a story. I came across it in one of Tony Robbins' books. He mentioned John Templeton. He's a very well-known guy, and he's one of the greatest investors of all time. When Germany invaded Poland in 1939 and Europe plunged in World War II and the world were paralyzed with fears, he invested $10,000 exactly,
Wow.
the number you mentioned, in New York Exchange and New York stock market. He bought 100 shares of every company traded in less than $1.
Yes.
Which considered nearly bankrupt. When the war ended in 1945, the US economy surged again and he ended up multi-billionaire.
Wow.
And the story in the book of Tony Robbins, The Game of Money.
I actually have the book.
Most people, they forget that the situation will not last forever. Financial winter is a season and it is followed by spring.
Yep, I agree. So look, thank you very much. Look, so I haven't introduced myself earlier, but my name is Royston Cumberbatch, and I've done a lot of stuff in investing as well. And I think, as Dr. Wafaa just said there, of course, you know, there are different strategies to invest your money. And for them, one strategy that I know as well is to look at companies, for example, whose stock has been very low, right? Maybe like even for 1 year, that's now starting to grow up, starting to go up. Because if it's been if it's been flat for so long and it's starting to go up, there might be a reason for that, you know. There might be a reason for that. So it's very good to invest in companies that has potential growth, even though currently they're very stagnant. So look, Dr. Wafaa, thank you very much. We've been going just for over half an hour. It's a very great interview. And we're obviously going to be sharing this with people on different social medias, etc. I want to thank you for your time, and I want to say that it was very informative. Even I was actually listening there and learning some bits and pieces from you. You do have a wealth of knowledge that many people can actually learn from you. Dr. Wafaa, so where can people find you? Where can people find you? If someone wants to work with you, you know, get advice from you, you know, become, you know, you want some coaching from you, where can they find you? Or media?
I'm available on social media, on LinkedIn and Facebook. I have a website called thesmarteducation.com.
Yeah.
And I'm very interested in financial literacy and financial education as well.
Yes, so on LinkedIn, etc. How do they find you? What's the full name? What do they look like?
Maybe we can put the links.
Okay, yes. So we will put some notes and stuff when we put this out, let's say in YouTube or on Anchor, podcast, etc. We'll put some notes as well, because we'll be pushing this out. This is very informative stuff. We'll be pushing this on multimedia. Dr. Wafaa, thank you very much for your time today, and I want to wish you a very good rest of the day, and I'm sure we'll be speaking with you very soon. Take care and look after yourself.
Thank you, Roy.
Bye-bye. Bye-bye.